Hello and welcome to another edition of Real Talk. Thank you for joining me. Well, it's the absolute perfect spring sales at the moment with the real estate results. The medium house price is up 4.5% and has actually reached $720,000. I never thought I'd say that, certainly not within a year or two of it being $540,000 about 2 years ago. It's been colossal growth and it's the perfect environment right now for vendors. Anyone wanting to sell a property is getting the record prices, 8% improvement in the market. It's just crazy. In fact, it's been 8 years since we've had this type of figures. So if you look at medium house prices across the board, if we take a 3-bedroom home in Richmond, they've just hit 1.37 million. Against an apartment price, 3-bedroom apartments in Richmond have just hit $905,000. If you look at St Kilda East, a 3-bedroom home is 1.4 million and a 3-bedroom apartment is 907. So very, very close, the two suburbs, St Kilda East to Richmond at the moment. If we throw Footscray into the mix, it's very interesting because medium house price for a 3-bedroom at Footscray at the moment is 720,000 and a medium price for an apartment 3-bed is 561,000. So we can all see what's going to happen now. Footscray has obviously been quarantined because of perceived high crime rates and a mixed industrial suburb, but I know what's going to happen. If you Google at the moment, there's only 6 houses for sale in all of Footscray, which we actually saw last year in Brunswick. Brunswick's had very, very few houses for sale, but obviously the lovely old cottage look is still alive and well and very much in demand. If we look at the overseas, the worldwide markets are up in almost every quarter at the moment. The Chinese and the Japanese market is up 2.6 and 2.7%. The US market's up 2% and the Australian market's up 0.04%. So we've got some really good growth happening around the world. In terms of dollar, the Australian dollar is up 6% against the US pound and it's up about 4% against the Japanese yen. And of course holding very strong consistently against the US dollar at the moment. Commodities, I had a big spiel on commodities last week, so I won't dwell on this. Coal is up again. Who'd have thought? It's up another 4-5% on last week alone. So commodities, iron ore is up. So I think that whole mining sector is going to see, and we're seeing it reflecting in Fortescue and a couple of other share prices. So I guess inflation is the big thing at the moment for all of the regulatory boards. What we want to see right now is inflation growing, and we really, really want to have an understanding around interest rates. So with the recent inflation growth rates of 0.5%, that's actually double the last 2 quarters. So with the bond markets being very, very strong internationally, and growth in every quarter, and certainly growth here on our domestic shores, I think we'll see the end of low interest rates. Certainly, I don't think we will see any more drops. If we were, what would trigger it would be unemployment. But with the growth that we're seeing, it's looking really positive at the moment. So all in all, the real estate market is the strongest we've seen in 8 years. The big growth has come from the donut, the inner and the outer donut, and we've seen those prices reflect in Richmond, St Kilda and Footscray. So in terms of the investor market, there's a lot of talk about oversupply. I'm going to write an article, so scroll down and you'll see the article on oversupply. In 2012 we had an undersupply. We've had an oversupply perceived for about 12 months now. The cycle will turn shortly. Developers are finding it really hard to get finance, and I'm predicting by 2017-18 we're going to be tipping back into undersupply. So scroll down, read my article, and thanks so much for joining me.